Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome to the Investing Podcast. Sam Frost, I will be hosting in place of Andrew Hall today. And this is my colleague, Ben Nye. Ben, how's it going?
It's going well.
Yeah?
It's going well.
I didn't forget your name, so...
Yeah, you even got the last name right, too.
Yeah, so it's a good start.
We have interesting story, actually. We went to a charity dinner last night, and the charity emailed Andrew, and before we went, and they emailed him Mr. Andrews. So they forgot his last name, too. So... Yeah, everyone's just forgetting Hall. They don't know if it's if it's road or if it's room or if it's like some other place in a house. Yeah. So they just say Mr. Andrew. So
dad jokes. Ben Nye, he's got them. So I know you're all here to hear about investing. We're actually going to talk about that right now. NXP and Qualcomm are in negotiations for Qualcomm to buy NXP. Reuters reported around noon today, supposedly that they had agreed on $110 a share for NXPI in an all-cash bid. For some reason, NXPI's traded down like 3% today, below 110 to like 101, I believe. So, Ben, can you elaborate on this?
Yeah, so last night, just before the market closed, there was more news out saying that David Faber actually came out of CNBC saying that they were looking at a deal of $110. Stock rose and to about 104, and so it closed, and we were feeling pretty good. And then this morning, or around noon, they come out again and say, Reuters reports they're about to do a deal that's $110, could be announced as early as next week, and NXPI shoots down to 101. So the question that we've been asking, we just came out of a portfolio manager meeting. The question that we've been asking is, why is the stock selling off when the probability that a deal gets done appears to be rising? So we talked about a few scenarios. One is that stockholders just won't get on board. Stockholders won't approve it. But then if you look down the holdings list, the largest holder is T. Rowe Price, 10% of the stock. They're not going to do anything. They'll vote for the deal, presumably. They're not going to be activists and say, we want more.
Right.
So the question becomes, why is the stock down? And we honestly haven't come out with a great solution, great answer for that. Obviously, when you do have a deal, it will trade at a bit of a discount to the deal price. That's how you make arbitrage profits. So.
Right.
One of the big hedge fund managers, John Paulson, this was kind of his bread and butter. He's well known for the financial crisis and betting against housing and making a lot of money that way. But his bread and butter was really merger arbitrage. So in this instance, you might expect a 2%, 3% discount, and then those arbitrageurs continue to push it up. It's interesting, just the degree of discount. I'm not sure. The earnings coming out soon for both companies. Nevertheless, this deal seems to be front and center. This deal seems to be the story of the stock. So what would you do with the stock right now?
It's interesting. We kind of mentioned this in the PM meeting is, immediately the first thing that you think of is that kind of arbitrage is like, it looks like a deal is being done at $110. Like there's a 10%, 9% profit to be made just by buying NXPI, assuming that deal goes through. But the better question is, what are we missing? Yeah. And unfortunately, I'm not sure anybody really has an answer right now. So me personally, I wouldn't. I would maintain a long position. Probably just hold out where I'm at.
We do like the stock on a fundamental basis. So that's our fundamental view of the stock. If this deal goes through, that's an added bonus.
Right. And if it doesn't go through, we're still comfortable holding the stock.
We are. Yeah.
And then the negotiations of the $110 share price for this deal implies that NXPI is worth somewhere around $110.
Right. Exactly. Last night, news broke after the market closed that Time Warner and AT&T were pursuing a deal whereby AT&T would acquire Time Warner in a deal, and then this morning we received even more news about this. And they say that the deal might close as early as Monday, which is incredible for a deal this size.
Yeah, it's absurd.
I mean, this is one of the biggest acquisitions this year, like one of the biggest acquisitions of all time. And the word is that AT&T is trying to rush this deal down because they don't want Apple and Google and other people who want Time Warner's content to compete with them and drive the stock price up. Says to me, why would Time Warner want to do a deal? I mean, you can delay these type of deals a very, very long time. Say, oh, well, we need this documentation, we need this piece of documentation. I mean, we see it all the time in just our day-to-day work here. But it's interesting to me also that this deal seems to have come together so quickly. Oftentimes you'll see investment bankers who are advising on the deal that they will go to the press and provide them with information about the deal, and that's when you see the headline saying, people familiar with the matter, a lot of times these are investment bankers, they will provide information relating to the deal to the press. It's crazy that a deal like this will come together so quickly.
Yeah, I mean, this seems like the largest, quickest deal I've ever seen.
Right.
I mean, I don't know if you have any experience with another deal.
I mean, so for example, like the deal when I moved down here, like this was like a 3-month process for me to finish up my job there and move down to Georgia. And now, like they're doing one of the biggest acquisitions of all time in the space of like a weekend.
Yeah, which is crazy.
Incredible. It's
And
incredible.
then something else I want to talk about. We've talked about this as a group. We don't 100% know if this deal makes sense for AT&T. It's such a huge deal, and I understand more so on AT&T's part about trying to rush it through than on Time Warner's part.
Right.
AT&T probably hoping they can get a better price and they don't have competing bids coming in. But AT&T already has a ton of debt, and they're going to have to bring on even more debt. And so I think it was their CFO had mentioned that, goal was to have a single A debt rating. But there's some concern that raising the amount of debt needed to fund this acquisition could drop their investment grade debt rating down to junk bond status.
So get ready for a cash and a lot of stock deal.
Yeah, I mean, that's a good point.
So there's probably maybe quite a bit of dilution if there is a deal that goes through. And you brought up a good point in the PM meeting. So AT&T would be digesting this large acquisition. Sprint and T-Mobile are kind of competing with inferior spectrum positions, so that kind of leaves one player.
Right.
And so we were talking about Verizon in the PM meeting.
Yeah, so it's interesting because in my personal opinion, this huge deal for AT&T could really hurt their equity, could hurt their share price. And so it kind of leaves one main player, because Sprint and T-Mobile are kind of competing just to get up to par with the other two guys.
Spending a lot of money in the process.
Spending a lot of money, and so it kind of leaves one player left, and that's Verizon. Verizon, they've been sold off because of the whole Yahoo deal.
Right.
And so they've been sold off a little bit for that, but they spent, $4.9 billion on it versus however much AT&T is going to have to spend on Time Warner. So could be a good opportunity for Verizon. That I think a lot of people could see this as an opportunity or people who want exposure to the industry, I think will go towards Verizon and could just float that share price up.
Yeah, so full disclosure, we are long Verizon, and I actually bought some more today. Verizon's been hit on earnings, which I think is more of a temporary blip and not an indictment on the longer term thesis. So based on my view of kind of value investing, I decided to go into the stock. You're almost up to a 5% dividend yield now.
Yeah.
So
not a lot of growth is priced into them either, which is interesting. Which AT&T honestly doesn't have a ton of growth priced into them either, but again, AT&T is just spending a lot of money.
Yeah, well, I mean, Verizon has seen a declining top line. But if you think about just holistically the state of telecom and data usage, it does seem that data usage will rise over time, and then the money spent on data will become increasingly important, and Verizon should be a beneficiary of that. And its spectrum position is really enviable because they bought a lot of that spectrum right when no one else was buying it, because it was right in the financial crisis. So that's our view kind of on that industry. Time Warner AT&T deal, we just don't know. That's just kind of a bit bizarre.
Very interesting.
We do like Verizon. full disclosure though, we are long Time Warner for the moment.
Yeah.
We'll see what we want to do on that come deal time.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are our professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.